What's good, y'all? It's your boy Reek got options. Like I always say, whether the market's up or down, we see green. And although it's Memorial Day and the market's closed, the futures are still open. They actually opened up yesterday at 6 p.m. and we opened up here at Friday's high, started pushing up on the S&P 500 futures, and we started pushing down some today. So some profit taking might be happening because this move is heavily influenced on headlines that the war in Iran could possibly be ending or have another ceasefire. And the Strait of Hormuz should be opening shortly. Again, this is heavily influenced by headlines, so we can't put too much stake into that. We have to go over charts, so that's what we're going to do right now. You see we had a double top right here at 75.15, and if we break down below 75.15 and into tomorrow, we could start filling this area up right here. And if this 7,500 area does not hold as support, then we're going to come down to the 78% retracement level from previous week's high to previous week's low on the Fibonacci retracements at 74.77. We all want the war to end. We all want inflation to end. You know what I'm saying? But we're going to get to that because oil still is up above 90. But once it starts to break below 90 and 85, it's going to be good. Similar situation with the NASDAQ. All right, with tech, it is also looking the same exact way as SPY. So if we get under this level right here at 29,687, we could break down to the 78% retracement level at 29,455. And you see that we had this hammer right here, right? And this is supposed to be a bearish reversal, but we have the invalidation. But if this starts to break down, that would be a false breakout. A false breakout is extremely bearish. So you want to watch these levels, and especially the non-EMA right here at 29,360. So pay attention to these levels, the non-EMA on the daily for the US 100 or the NASDAQ, and the 66618 range. You don't want to play around with these levels. Remember, headlines do influence moves, but technicals reign supreme. So be on the lookout for that. Most importantly, US oil is sitting at the 50% retracement level on my multi-year at 91. So if it keeps breaking down here, we're going to invalidate this inverted head and shoulders, which is supposed to be a bullish reversal. We could not get above the 66618 range and push back up to the highs around 113. So under 90, you know we're coming back down to the 85 level, and that would be great for inflation. It would be great for oil. It would be great for gas prices universally. This is something that we want in the market, guys, because if that doesn't happen, we keep pushing up, it's going to be bad. But on the bright side, which could give us a continuation, is the 9 EMA crossing the 21 EMA. That's very, very beautiful. And we are also under this 50 EMA on the daily. We did find support, but now we broke down. So we could be looking good in the short term coming down with oil. And then the market could also correct because we are sitting at the highs and we have not come down yet, no matter how oil and everything was looking. But this is one of the beauties that we have right now, that we're under the 50% retracement level on a multi-year for US oil. Looking back at the S&P 500, these futures are good, but we are retracing. If you want to prepare for tomorrow and see what's going on, you could go previous day high, previous day low, but this day did not close yet. So we're going to take our Fibonacci retracements and go from Sunday's high and low and see that we are definitely under the 50% retracement level. Just zoom in right here. And if we get below the 23% retracement level, which is in confluence with the previous week high, then we should flush down here. I'm setting my alerts at 7,500. We get under 7,500, then this move could just be a correction waiting to happen. But if we hold here, we could break back out to the highs. That's something that you want to pay attention to. But like I always say, whether the market's up or down, we see green. Peace.